Welcome, everyone, and thank you for tuning in to another episode of ARIVE Tenacity Talks. In this podcast series, I sit down with industry leaders and business legends and try to uncover stories behind their success and gain insights into their growth strategies. Hopefully, these insights can help you grow and scale your business. My name is Harish Tejwani, and today I'm truly excited to have someone with me who is an industry stalwart. He has been in the housing finance space for more than 35 years. He has seen every market cycle. He's a powerhouse. He has led transformative initiatives. It is my honor and pleasure to welcome Baron Silverstein, President of Newrez, to the show. Thank you, Baron, for joining us today.
Thanks for having me, Harish. So I really appreciate being on. And, we also very much appreciate your partnership, your technology, which is awesome. And, I'm excited for our discussion today.
Yeah, thank you. So, for those of us in the audience who do not know much about your story, your journey, give us a snapshot of your career, how you got to where you are, and what drives and motivates you.
Um, so, look, I think like many of us, I'm not sure that when we were coming out of either college or school that we thought we were going to get it into the mortgage industry, and I think I was pretty much the same. Looking for a job, not exactly sure what I wanted to do, knowing that I had a finance background and a finance degree. But I landed in mortgage trading at Bear Stearns in 1989, and that was my career. I was at Bear Stearns for 20 years, and then during the financial crisis in 2008, I went over to Bank of America, and then I was at Bank of America for 11 years, all in what I'll say is mortgage securitized products, and then I started at Newrez in 2020, in the beginning of 2020, and then basically my first foray into the operating business, origination and servicing. But for my entire background was always in mortgage trading and mortgage securitized products. So.
Yeah, no, thank you. Thank you for that. And I also want to highlight our partnership. Like you mentioned, Newrez has been a partner of ARIVE since its very inception. So I want to thank Tony, Dave, the entire Newrez team for your collaboration and support. I also want to share one fun fact that you mentioned. You've been with Newrez for 5 years, about 5 years. So both of us are celebrating same milestones. ARIVE has also been in business for about 5 years. So congratulations to all of us.
Yes, exactly. So basically 5 years, and it coincides with the beginning of COVID. That's when I started. So that was an easy day for me to remember. My first day on the job was March 13th, 2020.
All right, so let's dive in. I think the topmost question on everyone's mind today is mortgage outlook, mortgage market outlook for 2025. We have a new administration in place. They have new policies, new goals. Tariffs are headlines almost every day. There is an increased effort on reducing government spending. The role of regulators these days is in question. So, from your opinion, how do you see these policies impact the market outlook? And do you have a crystal ball to predict where rates will be in 2025?
So I don't have a crystal ball, but our view is it's rates higher for longer, right? I don't think that we're going to get back to an interest rate environment that we had in 20 and 21. I don't. I think that interest rates are going to basically be in this somewhat of a range bound level as to where we are now. Does that mean we can't get to a 650 or even back to a 6% kind of par rate coupon? We do have a view that you'll probably see a steeper curve with shorter term rates kind of lowering, and perhaps that might bring in some adjustable rate products We've had an inverted curve now for the last few years, so and only recently we've had more of a steeper curve. So I do think that the expectation is that you'll see a steeper and steeper curve. So, but I think that the 30-year fixed rate is more likely than not just rates higher for longer. But even with where rates are, there's just gonna be this. My view, at least, is that you're going to start to see more and more inventory being available, and you still have significant demand for people that want to buy homes. So the real driver is more going to be you're not going to have that refinance volume. Those loans that would come in, you're just not going to see that significant percentage of those refinance transactions that you might say is like more for a normalized environment that you might have seen from 2010 all the way to 2019. I think I read something even this morning that about 20% of all mortgages today are at current coupon. So it is going to take some time, I think, for a lot of the mortgage stock really to kind of reset to current coupon. And when it does, then the market will perform in a more normalized manner. But there's still a lot of opportunities, and what our loan officers and brokers really focus on is purchase. And I think the opportunities are there in purchase today. And I think coming into the spring buying market, you keep on reading about more and more homes for sale. People looking to whether or not they need to move, whether or not they want to downsize, whether or not they want to upsize. Yes, you still have affordability issues, but consumers want to basically buy homes. Consumers want to move, and I think you're going to start to, see a little bit more of an efficient marketplace on that. And I think you'll continue to see that pick up. So when I think about where we were in 22, 23, even 24. I think 25 is going to be a better year for the purchase business overall. And so, yeah, you're going to have rates higher for longer, but I still think it's going to be a better year. The other thing I should just mention is, when I was looking at some of the MBA numbers, 2023, was, if not the lowest number of transactions. In other words, the number of units originated that we have seen in the last 25 years, and it's possible it might have been ever. So, I mean, that's really telling, for where our market was, especially given the size of the market after 20 and 21, that 2023 had fewer units that had ever been done before. And I think the second lowest year was 2024. So I don't think we're going to see that in 25. I think we're going to see even better year, and I think we're going to continue to get more and more momentum. And if there is a rate rally, there'll be some tailwinds with respect to maybe some refinance volume that loan officers will be able to pick up on. I don't think it's going to be this huge panacea that is going to basically drive the industry into a more normalized framework. But I do think you might see some of that if you're going to see some sort of rates rally at all. But I don't, like I said, rates higher for longer. But I still think for our industry, especially when you benchmark us to where we were in 23 and 24, the expectation is 25 should be a better year than certainly those 2 years. And I think we're going to continue to get positive momentum in months and even into 26 and so forth. I think it's going to get better and better.
Yeah, absolutely. Even I was looking at MBA and agency forecasts. So they're forecasting little north of 2 trillion in total originations, which is higher than what we did in 2024. And another interesting fact is the number of loan officers renewing their licenses has also gone down. So that means, as you rightly said, there is a lot of opportunity out there, for brokers and loan officers to go and get them, which is a perfect segue into looking at how technology can help boost efficiencies, increase production, lower cost. So you've been into securitization. Now you're running an operating business. So from your viewpoint, where can technology have maximum impact as it relates to loan origination for loan officers and brokers?
So look, it's in my view, it's all about customer experience, right? And you know, loan officers today do an incredible job with basically helping their borrowers buy homes, and helping their borrowers through, the mortgage process, which is, can be challenging. And I think every single loan officer understands that. And part of it is that everything is so manual, right? And there's also what I'll say is a big difference between lenders, right, about how their mousetraps work, right? Which is, why, even the technology that Harish that Arrive does is better than, you know, what I would say is either most or all of the technology that's out there today. And I think from a broker perspective, and I think that is part of the some of the challenges that brokers would have, and then lenders do things differently, and they have different processes. So, certainly, if there is technology to, you know, make things easier, that's a really really good thing. And I think even when you look at, mortgage originations and mortgage process from an LO perspective, everything kind of just gets chipped away, right? You can only do one piece of it. Okay, this just got easier on this one particular component. And I think that when you think about it broadly, from a customer experience perspective, to the extent that you're able to, streamline the process, make it easier for a consumer to get a mortgage, that is, I think, the goal overall of I think all lenders, right, in order to basically make that process better. And I think about, some of the technology that's been out there in whether it's, being able to immediately approve a consumer's income, their assets. We partnered with a company I think called Argyle, to the extent that the consumer is willing to basically provide their credentials for their bank and their employer, right? We can get that information very, very quickly. And these types of things can make the process better, right? It protects us from a rep and warranty perspective, from a fraud perspective, but we can also get, approvals done really, really quickly. And I think that that's the goal. If we're able to make it more transparent and very, very quick and efficient, it'll benefit the entire ecosystem, especially loan officers, right, in their process. And I would say that is, to me, absolutely what technology can do. And, I just think it's just a matter of time. It is not so much of a matter of if it's going to happen. It is. And I think some lenders have done a really, really good job at it. I know from our perspective, we are headed in the right place. We're headed in the framework of trying to make everything digital and make it really, really easy for either our loan officers, our broker partners, to basically get loans, fulfilled. That's the key. And technology for me is the key for that.
Yeah, no, like you said, from even our perspective, we work with many great lenders like Newrez. So what we are trying to do at Arrive is, like, from a loan officer perspective, how can we streamline the entire process across lenders? Typically brokers are working with 5, 10, 20 systems, logging in, logging out. So we want to build this invisible system, which is kind of consistent across all the lenders we partner with, across all the borrowers they work with, all the referral partners we work with. So we are in this exciting space, like how can we streamline different tasks? Like you said, loan officers are chipping away one by one. So can we somehow make it more consistent and streamlined? But like you said, technology is the way to go. And that leads me into my next question on AI, artificial intelligence. As you probably know, AI is a buzzword almost everywhere today. And we're not going to discuss DeepSeek in this conversation. That's a topic for maybe a different podcast. But we hear all the time, like, AI is going to come and replace loan officers, maybe replace underwriters, replace closers. So then the question becomes, is AI really a game changer or a job eliminator? So I want to hear from your perspective, where do you think the state of industry is today and where it is headed? And will AI be augmenting existing roles to make them more efficient, or it will eliminate some of these roles?
AI is a game changer. It is a game changer, and it will continue to be a game changer. And I think that there's a lot more unwrapping that needs to get done. Do I think it is going to, you know, supplant loan officers? No, I don't. I think that, the home purchase experience, the home purchase journey, right? Consumers want professionals to help them, and the home purchase journey is not something that is easy. There's a lot of emotion in it. There's a buyer, there's a seller, and there's different, what I'll say is state jurisdictions that make things complicated. And there's a lot of pieces to the puzzle that, having a loan officer help consumers front to back, I don't believe is going away, right? Yes, there's some customers that are going to say, I know everything already. I have it all done. I just want the mortgage. Yeah, there's going to be a percentage of those customers. There are people that, may or may not. I feel the same way about realtors. I think realtors are critical to the home buying journey as well. And I don't believe that if I use this term Uber, right, is the mortgage business or even the realtor business going to get Ubered? I don't believe it. I think there are going to continue to be significant demand, and there's so much value add from loan officers and from realtors, that that is an important component to the home ownership journey, and taking on a mortgage. Certainly, when you think about refinance transactions, there's a little bit more of a different variable, right? You're really just talking about trying to save money, and that to me is a little bit different than the home purchase. But on the home purchase side, AI can be beneficial though to LOs, right, by making the job better, right? So if you think about some of the components of, what can occur, if you think, one of the things that we're focused on is call transcripts and sentiment, and making a determination of next best action, right? If you have AI that is creating a call transcript and then an immediate summarization of every call that a loan officer is on with a consumer, right? That will help loan officers be a lot more efficient in how they basically manage through their leads, and how they're basically focusing on, being as organized as possible, right? Because a loan officer wants to be in front of a customer with intent, and right, but they also want to cultivate customers that have an interest in maybe buying a home, and or realtor partners that they're otherwise trying to basically stay in touch with. And I think when you think about AI, that is a real benefit and a real driver of amplifying the efficiency of a loan officer. And I think that a lot of these tools are all still to come, right? And AI is still very new, and but at least the initiatives that we have going on, with respect to the operational aspect, certainly these items are going to make us a lot more efficient. Do I think it's going to have a job changing? Not necessarily at this point. I do think that there will provide significant efficiencies to the process, which are going to make everything better, right? If I can speed up our approvals from an underwriter perspective, if I can speed up our approvals from looking at appraisals, which we already know we can, through AI, it is just going to make the process significantly better for everybody involved, not only the homeowner, but the LO, and even from the lender perspective, from our risk framework. So I do think this is a game changer, and it's a really interesting, and I would even use the term cool, right, from the perspective of just driving change in the mortgage industry.
Wow, that's fantastic. Let me ask you a fun question. If there was an AI agent, let's say a Baron bot, what will be the first set of mundane tasks that you'll be happy to give it to him every day so you become more efficient?
Ah, man. For me, I wish I could snap my fingers and say that everything could get done tomorrow. But from our view is, we get millions of calls every single year, right? To the extent that we can basically streamline, our call centers and improve our customer experience and making sure that we make it really, really easy for customers. Our digital tools, our self-help tools, like these are the things that we know we can drive our customer experience by looking at some of the pain points that we have within our organization, and that's what we're really, really focused on first. But also, driving our CRMs. So we understand what next best action is, and looking at triggers of what customers are doing, and making sure we're staying in touch with them and knowing what their needs are. And those are really, really important to make sure that you amplify your knowledge of your customer, KYC as we call it, and and staying in touch with them when they need you to stay in touch with them. And this is no different from what top LOs know.
Yep.
Staying in front of your customers, and it's no different, and helping them as best as you possibly can, and trying not to do it manually, because doing things manually is time consuming, and it's hard to stay on top of everything.
Yeah, absolutely. And like you said, data is the real fuel that drives all these AI engines. And like you mentioned, you're collecting all these data points as calls come in, loans get done, you're servicing these loans. So if I were to extend, your thoughts, like, are there other areas of if I look at mortgage from end to end, where data and data mining may have transformational impacts? Let's look at capital markets, maybe loan trading, maybe servicing, underwriting. Do you believe there are specific areas in an entire mortgage journey that will get disrupted because there is so much data and so much data mining that is giving us more and more insights?
Yeah, I mean, it's pretty much along the same themes that I've been talking about. I'd say from the LO perspective, what's really interesting to me is, like, we're spending a lot of time, in just basically thinking about, our digital tools and, our performance marketing strategy. When I think about, wholesale overall, right? When you think about how we cover wholesale and how we stay in touch with all of the broker universe, and as well as the loan officer universe, right? And then staying in touch with them, staying connected, communicating with them. You need to do it utilizing your digital tools and data. And notwithstanding just even the size of our servicing portfolio, we have to do the same thing. So these are the things that I know would benefit LOs. A lot of LOs are really, really great at their social media feed, so they can stay in touch with their partners as well as their consumers, but also in their communities, right? And then making sure they're presenting, who they are to their communities, and trying to be as helpful as they possibly can. If they're doing it through social media, right? How do they look at that social media post? How do they look at that data that they're out there presenting, and then who's viewing it? And then depending upon who's viewing it, how do you then basically do a further outreach? And that's data, 101. And, these are the types of tools through technology, through digital means that, you want to basically understand. And, that will help, I think, everybody and all LOs really, really basically amplify their existing business. Right? And even if you think about data from, if you're an LO in a particular geographic footprint, which are the realtors that you don't have relationships with, where you can kind of, make sure that you have outreach to them, and making sure that you're trying to stay in front of them. And obviously not only staying in front of your existing customers, but how are you basically trying to make new relationships? And I think that is really, really important. And I think that you can do through the use of data, publicly available data that's available today, or even if you're using digital means from a social media perspective, or you have, your own websites, and just making sure you're staying in front of that. And that's what data to me is really, really going to be useful, right? Certainly. And Harish, I know you brought up cap markets and other different strategies. I mean, when you think about data, every single one of those different pieces will benefit from the use of data across the board, right? And when I think about cap markets, it's right. You get a better view as to which regions have particular, pricing pressures, from, to the extent that you're in a high priced community, it's going to have a much different type of pricing pressure versus you might have from, other communities around. And I'm not trying to say that, that you're going to have different pricing methodologies, across each one. But if you know that there's a region that is just going to be more of a VA region because of a military presence, right? You're going to have that, and you should at least know that that's the area that you're in. And I think that you'll be able to manage through data and your partnership with your LOs. Try to be as beneficial and useful as you possibly can.
Yeah, absolutely. And like you mentioned, data has been always around from at least collection perspective. What has happened is now you can build tools to actually mine that data, get more visibility, and then you can formulate your strategies for success. But thank you for that, for those insights, Baron. I'm going to switch gears a little bit and talk about non-QM and alternate financing options. Newrez has an absolutely robust set of programs for non-QM. What we are actually seeing at ARIVE is there has been a sudden surge of many lenders trying to do non-QM, or traditional lenders trying to scale up non-QM production. So two questions in that regard. What is leading to this surge in the non-QM space? And how do you see non-QM securitization? What is your outlook on securitizing such loans? And any words of wisdom or something you want to tell everybody, like as a lender is entering non-QM space, what should they watch out for?
I do think it's going to stay, right? And that there's significant demand because, like there's less production in the marketplace today from a non-agency perspective, and what non-QM affords is that it is, basically there's added yield for investors, and I think that there is quite a bit of capital on the sidelines that used to invest in mortgages. Certainly there was a lot of production in 20 and 21, but then when you think about 22, 23, and 24, that production dried up. And, to the extent that, these investors had capital to put to work, they wanted to think about and see where they could put that capital to work and still earn an added yield. And, that's really, I think, part of the draw to it. And I think what you've seen is just it's gotten very crowded and it's gotten very competitive. So, my advice there is make sure that, to the extent that you're delivering product, to different lenders, that you believe that lender is going to be there for you as a partner in different market environments and different market cycles, right? And that's really important. So to the extent that, things are good now, and you might sit there and go, all right, for that extra quarter point, I'm willing to basically do it with this lender who I'm not that familiar with. But to the extent an issue occurs, that lender may not be there tomorrow. And I think that's the tougher part. What that any one of the LOs and the brokers should evaluate is, when times are good, you need to make sure that you feel like you're partnered with the right people. And I would tell you that, from Newrez's perspective, we're very, very much focused on, especially when I think about it from a lender perspective and, the banks that we borrow money from, we want to make sure that those partners will be there with us through thick and thin. And I think you need to think about that, especially when times are good. You want to make sure you have the right partners. And, I believe that Newrez is and will continue to be a great partner for all of our brokers. And, but there are a lot of different competitors in the non-QM space, some of which are not as strong as others.
Yeah, no, thank you. And like you mentioned initially, this also opens up newer opportunities for brokers to go and get more business, which cannot be serviced by traditional agency loans. So you mentioned Newrez. So maybe to our audience, tell us a little bit more about the Newrez platform. You guys are a multi-channel originator. You also service your own loans. So maybe tell us what are the advantages, or maybe what are the challenges if you actually start servicing your own loans versus selling the servicing rights?
Yeah, I mean, look, Newrez is a company that was built through multiple different acquisitions. That were all basically acquired by our parent company, Rhythm Capital, and started in 2018 where they acquired a lender called New Penn Financial. It was basically a wholesale lender and it had a small call center as well. And we also, at that time, acquired a third-party servicing division called Shellpoint Mortgage Servicing. And then we acquired the assets out of the Ditech bankruptcy, then Caliber, and that's where Tony came from, and Dave Schroeder as well came from the Caliber acquisition. And I think that both of them really kind of, what I'll say, is elevated and really is driving, what I would say is our wholesale platform today. So each of the pieces really came from those different acquisitions. But, Rhythm also was a large acquirer of mortgage servicing rights, which we still are today. It's driven our platform where we have almost $900 billion worth of servicing. And it's a strategic, asset for us. It's a strategic business for us from a servicing perspective. And, the origination businesses for us is we really kind of look at it as that we have a large, what I call B2B business. And our B2B business is 80 to 85%, depending on any quarter, of our entire platform, right? And that B2B business is from a wholesale perspective, but also on a correspondent perspective. And really what we look at it is, we're able to acquire customers and, do business with preferred partners, right? And then from there we have, our direct businesses, which is needed just given the size of our servicing business, right, to stay in front of our core servicing customers. And that's really how we look at our business and our platform overall, right? So, our direct businesses are somewhat defensive, but we do have some branch models, LOs that we acquired from Caliber Home Loans, but it's a much smaller business, and the LOs that are with us today, I think, have kind of understood our model and how we're trying to drive the business on a go-forward basis going into 25 and beyond.
No, thank you for that. And I learned recently from Tony and Dave, like for wholesale brokers who are sending you guys loans, since you service those loans, their clients are protected for 18 months from any solicitation. So that's a great thing you are doing for our community. So thank you so much for that. I'm going to go into my last question of this talk and talk about leadership and caring fiercely philosophy that you have at Newrez. Like you mentioned, Newrez platform has been built through many acquisitions. So help our audience understand what does caring fiercely philosophy really means, and how does it impact your leadership and culture at the company?
So we've been like, I'll say this, like we've been through a bunch of different acquisitions, as you mentioned, Harish, and, we've debated, what do we stand for? What's our North Star? And unanimously, my entire leadership team, including myself, is, we care. We care about our business. We care about our platform. We care about our clients, right? And our clients we use broadly, and that includes our broker clients and all of the LOs within those brokers, our correspondent clients, and our third-party servicing customers, right? And we also care about our homeowners, and we care so much that we'll do whatever it takes to basically ensure the best customer experience that you need, and things that you need. We want to make sure that we put in our effort, our time, our capital, right, to make sure that we are delivering for you. And that is the DNA of all of my leadership team and for every single person at Newrez. And that became, for us, a really great rallying cry. And that's our rally cry for 2025. And everybody believes it, which is awesome for us, right? And, the mortgage business is not an easy business, as I know you know. And but it also is a fun business at times. Sometimes it's not. But, it really, for us, it really kind of solidifies what Newrez stands for, that we care fiercely for our clients, for our homeowners. And, it shows in the relief efforts that we've done from the hurricane that have come through, the LA fires, and a lot of the other what I'll say is tragedies and issues that homeowners face, right? And and that goes from myself, leadership team, all the way down to our call center representatives, our loss mitigation teams, right? About caring fiercely for their customers, whether that's the homeowner, whether that's their employee, or whether or not that's their clients, and that's what drives our company. And it's great to see. I believe it through and through, and hopefully you agree as well as one of our technology partners, about what our organization means and what it stands for.
Yeah, absolutely. And we are culturally very aligned. We also have a core value of creating raving super fans, like to your point, do whatever is best for our customers, our partners, our employees, and everything kind of settled itself. You can build a great organization, but just following the simple principles. So again, thank you for those thoughts, Baron. Greatly appreciated. I did promise you I'll throw a curveball at the end
All right.
in this session, if you remember. So here it goes. So what are like 2 or 3 fun, interesting facts about Baron that you can share with your audience that might surprise them? It could be any interesting hobby, maybe your morning routine, anything that is fun and interesting that we may not know about.
I really, I knew you were going to throw something out like there before me. Oh boy. So all I know is
Any talent, a hidden talent you might have that we're
my,
not
my
aware of?
hidden talent now is that now that the Philadelphia Eagles won the Super Bowl yesterday, because obviously that was yesterday, that I have to wear an Eagles jersey, which is quite depressing for me as a New York Giant fan, and the Giants are pretty bad at this point in time. So I would say that across the board. And I would just tell you, look, what is my talent? My talent is, making sure that we're all aligned from a business perspective at all times. And that, by the way, means caring about your leaders and making sure that you understand who they are as people. And I've always felt like I've got a good tact on being able to do that, right? And communicating well with our teammates and just making sure that, we are aligned, right? And that means having fun with them too, right? And we just did our leadership meeting in Vegas just 2 weeks ago, and not that we felt that Vegas was the best place to necessarily get everybody together, but sometimes Vegas can be a great place to kind of get everybody together as well. And it was awesome. And, and not that I'm a very good gambler, but I guess I ended up winning the football pool,
Oh,
so
cool.
that was a good thing. So knock on wood. But I'm the fun facts I would tell you is that I care fiercely, and I will say that. And I know that doesn't sound like that much fun, but I believe it. I believe it where I am today, and I believe it drives our organization and it drives where we're headed.
No, I think you're absolutely right. Mortgage industry is kind of like you said, it is a difficult industry. So trying to have fun and staying ahead in this industry is actually a big interesting fact. So thank you again, Baron, for joining us today. We appreciate all your time, and hopefully our audience will learn a lot from this discussion. Thank you so much.
Harish, thanks very much for having me, and thanks for being an awesome partner. So I appreciate it.
Thank you so much. Thanks, Baron.